Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news markets greeted good US jobs data with considerable scepticism. American employers added 250,000 jobs in October, and that was above expectations, although that did not reduce its already low unemployment rate of 3.7%. Their key participation rate moved little and sits at just 62.9%. However, average hourly pay rose 3.1%, the best in nearly a decade. Taking some gloss off the jobs result, however, was that September data was revised down by 16,000 to a low 118,000 in the month. The higher-than-expected rise in wages brings forward the Fed's likely rate hikes and adds to their likely count. Consumer price rises are starting to flow through in the economy. Wall Street fell 0.8% on the news, while the US Treasury 10-year yield rose back up to over 3.22%. The oil price fell. All that happened even though there seems to be some talk that a US-China trade deal is now possible, so clearly markets are sceptical. The September American trade deficit has come in at $54 billion, of which the goods deficit was $77 billion and the services surplus was $23 billion. The US goods and services annual trade deficit against all countries represents 2.9% of American GDP. And north of the border, Canada also reported better than expected jobs numbers, but they also came with a sting. In the 12 months to October, the number of employed people grew by 206,000 or 1.1%, with the bulk of the gains in full-time work. Over the same period, total hours worked rose 0.7%, but the October data showed a lower participation rate. Fewer people are looking for work there, down to 65.2%. Still, that's much higher than the American participation rate. China has announced new job creation measures. Given the stresses their economy is facing, the announcement involved humorous language gymnastics to underplay the real reasons why such a new initiative is required. We should also note that the Shanghai Stock Exchange closed up an impressive 2.7% on Friday. In Europe, the European Banking Authority has published results of a stress test it ran on major lenders from the EU and Norway, showing that a set of British banks and 2 lenders from Italy fared the worst. The US Treasury 10-year yield is starting the week sharply higher at 3.22% and a 14 basis points rise for the week. Their 2-10 curve is steeper at 31 basis points. Gold is down $4 to $1,232 an ounce. US oil prices fell today to just over $63 a barrel. The Brent benchmark is now just under $73 a barrel, also a pullback. Russia, Saudi Arabia and the United States all indicated they were pumping at record or near record levels. The US's Iran oil sanctions are about to start, and they have issued waivers to 8 countries to allow them more time to shift purchases. Japan and Korea are on the confidential list, and China may be as well. The Kiwi dollar is starting the week noticeably stronger at 66.6 US cents, and recall it was 65.1 US cents just a week ago. On the cross rates, we're also much firmer at 92.5 Aussie cents and 58.5 euro cents. That puts the TWI back up to 71 and its highest in 3 months. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.